Seamus, where are we on output growth and employment growth, if there is that, heading into the fall?
I think we've seen a pronounced slowing in both of those as we went through the first half. There's a lot of noise through GDP in sort of Q1 and Q2, but it's moved down substantially to about a 1.25% rate. And what we've seen with recent downward revisions to unemployment is that it's moved into better concordance with that. And you've seen that same pronounced slowing to a much lower rate.
So is there slack in the labor market or not?
It's interesting because when you look at something like the unemployment rate or other measures of labor market slack, none of those are really showing a big increase. You may be seeing a little bit at the margins, but the unemployment rate has basically been completely flat at around 4.25% for the last year almost now.
So everyone's watching the employment numbers. We're also watching the inflation numbers. What are you seeing on the inflation side?
Yeah, you've gotten a little bit stuck there too. So stuck on unemployment around 4.5%, stuck on inflation at around 3% on core PCE. And again, for about that same year time period where you haven't seen the same sort of progress you've seen not terrible numbers, but not good numbers, not coming back to the 2% the Fed would like.
So obviously, you're not the only one watching these numbers. The Fed is watching them as well. How do you think they're going to react heading into not just the September meeting, but the meetings going forward?
Yeah, so I think you have to look at it from their perspective and look at sort of what's underlying this and how do we square these numbers. And we think a really important thing that we're watching and the Fed is trying to watch is a big slowdown in population growth from immigration policy changes that help explain why we have this stabilization in unemployment despite that. So when the Fed looks at this, they're worried about the downside risk to unemployment. It does look as if they're going to cut rates at the next meeting, but we're a little worried about sort of expecting a huge cutting cycle beyond this because of the stability in the unemployment rate, because of the fact that you're moving down in tandem with growth and potential growth potentially, and that you're going to sort of level off a little bit and maybe get some less friendly inflation readings as we go into the fall. So we're worried that we might have a relatively short cutting cycle.
And a quick question about the Fed and Fed independence, because more than ever before, people are looking at the Fed and its members and what's going on around it geopolitically or politically. What are your thoughts on that?
So I do think this is something that we are watching closely, the transition that is going to take place at the Fed next year with Chair Powell being replaced by a new appointee is the sort of thing that could play a big role. We're going to be watching closely to see whether whatever nominee that the administration puts in place is going to be A, respective of Fed independence, and B, how they're looking at these same trade-offs and how they're talking about them. But yes, we certainly think there is a possibility that you get a change in the Fed that leads to more pronounced changes in policy.
So finally, let's bring it all together. What are you telling clients and advisors when it comes to the economy heading into the end of the year and potentially its impact on the markets?
So at Virtus, we're a multi-boutique asset manager. We have managers sort of across the range of equity and fixed income. So how we're looking at that is going to be different across these managers. Different managers are going to take on board how we're looking at the economy and apply it differently. But broadly, we are looking for this slower growth environment to persist through the rest of this year and into next year before potentially picking up as we sort of roll through some of these headwinds into the end of next year. But it's not going to be sort of an immediate turnaround. It's going to be a little bit of time where we're sort of navigating this slower growth, higher inflation environment and sort of trying to understand exactly how this is going to play out across the capital structures.
All right. Well, thanks a lot for coming on and talking about it.
Thank you, Greg. My pleasure.